Okay, so very good morning to everyone. It is Monday the 5th of March. I hope everyone is well and has had a good weekend. Just getting straight into what we're going to cover today. Quite a few news items, obviously from a political perspective, between Italy, Germany, Brexit and so on and so forth. So no Sam today, I'm afraid, so I'll try and get through the news as quickly as possible, and we'll try to go through and look at some of the charts as we go through. So looking at the markets this morning though, obviously from a headline perspective, a lot of the information being driven by the still incoming results of the Italian election. However, if you look at the financial markets, they seemingly have taken the results in their stride, at least for the time being. The FTSE MIB, which is the local stock index in Italy, did initially gap down and underperform about 2%, but has already started to recover. And you can see here any selling pressure that we had in the euro currency. This is where we reopened for trade last night, and it was around 11 o'clock last night when initial exit polls came out, and as we're going to see, suggestive then as a hung parliament. We declined overnight, really very slowly overnight in Asia in the euro currency, and then we dropped a bit more aggressive as Europe came into the market. We broke the pivot level to the downside and a rundown and test of S1. But ever since that point, the market's been in full recovery mode. And if anything, we're trading back to where we were in the kind of consolidation of the Friday price movement. Likewise, in the DAX index, pretty similar story, really. We initially saw a gap lower, an extension of the selling at the Eurex open as we broke through Friday's low and close to that kind of double bottom. Quite quick move before then steadying, recovering as cash markets have got underway. So let's have a quick look then at what the situation is with Italy, and then we'll kind of try and look at a few other ideas and things that we've got on the agenda for the day ahead. So first of all, the headlines. Obviously Berlusconi grabbing a lot of the attention. I'm sure he would have enjoyed the topless protest yesterday that unfolded in front of him. But he has come out of this maybe a little bit not quite as strong as intended, because there's been essentially the populist five-star movement and the anti-immigrant Eurosceptic Northern League have seen the largest gains in the actual Italian election itself. So just a couple of pointers here just to round up exactly what exactly has happened. The situation is a hung parliament, so a period of protracted, intense negotiations can be expected now to go on for the coming weeks. And I would say possibly a reasoning for the market's relative calm this morning, and the calm that we've had really so far in the build-up to this Italian election, is because we've been in a bit of a political stalemate in Italy for such a long period of time, and this really is a bit of a status quo for the moment. But obviously as these negotiations get underway, the various formation of the composition of different coalitions can definitely be very interesting, probably potential to be more destabilizing domestically for the Italian economy, certainly if the people like the five-star movement and the Northern League start to make some headway. The five-star was the biggest winner from the election. It appears to be on course for Italy's strongest single party with about 32% of the vote, although it cannot form a government unless obviously it strikes an alliance, as I said, with other parties. So hence this is going to be going on for a number of weeks, one would imagine, going off historical precedents for the Italian political situation. The centre-right coalition, fronted by Berlusconi, won 37% of the vote, but remained shy, obviously, of an absolute majority of seats. And the biggest surprise was the surge in support for the Northern League, which earned 18% of the vote. So, obviously, this popular sentiment that kind of, I guess, took a bit of a backseat as a major risk during 2017, after obviously Marine Le Pen lost to Macron, and then you had a similar situation where we had a degree of continuity in the Netherlands, where there was a threat of a more far-right movement. That kind of took this populist movement as a little bit of a backseat, but then we've obviously seen things like Austria come up, and it's kind of reignited the flame a little bit. And then obviously in Italy, it's alive and kicking, and a lot of this to do with Euroscepticism that's been obviously building in recent years. In the case of Italy, unhappiness with EU budgetary constraints, regulatory policies, and handling of the migrant crisis, in particular, a sharp issue that's really kind of struck the electorate in Italy, and been reflected in these results, and can be sounded similarly across other European nations as well. So that's kind of the state of play. I mean, I don't think I really need to talk about it much more than this. It's going to be something we're probably going to be talking about for a number of weeks, but the main point being here that beyond the initial reactions, which was one of negativity, just given the polls and initial interpretation about the five-star movement and the Northern League performance, the markets have got over that already, and I think that's quite telling. Would I think that now the market all of a sudden is going to sell off? Then I think the answer to that is no. I think the move that you've had has already really occurred, and actually I think there's a much bigger story that's been developing. Obviously I was out of the office at the end of last week, but you know, as much as we'll monitor Italy, you know, Trump is still the driving force, and this steel and aluminium tax on the import of those goods that he's been suggesting with this America First policy, that's a way bigger deal in my mind for financial markets, for the right here, right now, than this Italian story at the moment, at least. We're going to get into that into a bit more detail in a second. Sticking with European politics first, there has been a slight positive development, and that is that Germany now has a functioning and cohesive government, at least for the time being, in place, as Merkel has now sealed her fourth term as Germany's SPD backed the coalition. So a repeat of the Grand Coalition in Germany. And actually, the SPD members approved the coalition pact by a wider margin than expected over the weekend on Sunday. So making it effectively easier for the party to effectively govern with Merkel's CDU-CSU led bloc. The Chancellor, Angela Merkel, now will be re-inaugurated by mid-March, allowing her to now push ahead with her priorities, with one of the main partners being Emmanuel Macron. If you remember, Macron was very much trying to form quite a tight relationship with Merkel. The only problem is Merkel had a pretty dismal performance in the German election a few months ago, and that kind of put the whole European push of unity on the back seat. Well, now Merkel is back in play. It'll be interesting to see how that plays out. So we've now got let's say this situation's been drawn a line under, and Germany can now push forward. The other thing, though, that I wanted to touch upon was this one. So obviously the comments that Trump made at the end of last week, I was reading, catching up on the markets last night, and obviously you had a bit of a dual sell-off last week in the equity market. Well, let's just have a look at the S&P to put things into a bit of perspective. So if we put this on to try and encapsulate some of the selling, I mean, last week was look, it's got highlighted here, these three phases of selling. That's a pretty decent move, up from a 2800 handle all the way through 2700 in terms of the S&P. You can see there quite a nice level of where previously holding up a bit of support, and then this recovery it's tested before then the push lower that we saw. This would have been up to the recovery on Wall Street late on Friday night, I guess. But the combination last week of Jerome Powell sounding quite optimistic about the prospects then for the US economy, and consequently what that will mean for federal policy, as Federal Reserve policy from a monetary perspective going forward, and typically equity markets in the US tend to react quite negatively at any signs that the interest rate trajectory, if you like, is getting more steeper, i.e. 3 to 4 rate hikes. And then you had, of course, Trump's comments about kicking off this whole trade war idea, and we saw that have quite an even bigger actual sell-off and ramifications for what that might have meant. This protectionist policy coming through from Trump, which ultimately he has always promised. And reading between the lines, you have to remember that, you know, as destabilizing as you might say a lot of Trump policies are for the long term, in the short term he has other things to contemplate, like the midterms at the end of the year, and his popularity is at stake. And so delivering on a lot of his pre-campaign promises, such as America's been, in his words, raped by other countries, then this putting America first policy from the administration certainly is going to appease a lot of the domestic voters and firms. However, this is highly destabilizing because of what it might initiate, and this really is what's occurred over the weekend, because we had some comments from EU's Juncker. And obviously you're used to hearing Juncker tied to Brexit. Well, Brexit needs to take a bit of a back burner, because the EU now is threatening iconic US brands after Trump has opened a door to trade war. So the US have slapped a 25% duty on steel and 10% on aluminium. Juncker's come out from Europe and said, well, if you do that, then we're going to start targeting things like Harley Davidson, Levi, US whiskey firms to try and impact you. And then Trump's come back saying, well, we're going to tax EU autos. And actually you did see VW and Daimler open a little lower, because for those particular car makers, which are obviously big components of the DAX index in Germany, the US is their second largest market. So the problem is when you get into this this kind of retaliation effect, this is incredibly negative for all parties. No one wins in this scenario. And so what Trump is doing here is, I think, probably gaining political support from those who voted for him in the first place, because he's actually following through with what his intentions were in the beginning. But what this would mean economically, if this was continued to escalate, could be incredibly harmful for not just the US, but for markets overall. And so it's going to be interesting to see how this plays out as the week goes on. And really, I guess it's going to be looking out and watching for how this conversation continues going forward. US equity markets, I think, are going to be quite dependent on this situation going forward in the coming days. I guess if we're looking at the S&P here, given the sell-off that we had was quite large last week, and overall US economic prospects for the moment remain fundamentally still the same, which is reasons to be optimistic and therefore to be supported only if this toing and froing of what Trump's been saying and then what other countries might do in response, I would say would be the catalyst for the direction going forward. If this doesn't escalate further, I wouldn't be surprised to see the market recover some of the lost ground from last week. One thing I think that's happening this week is the second in command, essentially one of the key advisors to the Chinese president, is going to be meeting with Trump this week. And so this is obviously a really key relationship to be monitoring going forward. So at the moment, China's sounding relatively calm on the issue and not looking to escalate. But one to be watched and for the direction of equities going forward. Other things to be aware of that we've had is, I think, again, quite interesting from a global macro point of view. This was at the end of last week. Bank of Japan's Kuroda joining the queue of central banks looking toward the exit. You know, although this isn't having an impact right now on this morning's market price, I do think this is really important for this whole driving force between the market's kind of sensitivity to global monetary tightening and kind of the last one that you would expect to be making hawkish noises is the Bank of Japan, but that is what's happening now. Again, I think this is quite a controlled manner, because if you actually look at the time frame, he's not really talking, that's Kuroda, the governor, on his remarks about basically drawing an end to their unprecedented easing towards the fiscal year starting April 2019. But it's the clearest sign yet that they're looking to wean their economy off this emergency level of support. One thing that I have picked up in the news this morning is that there's going to be a slight rotation in some of the governors at the end of the month, and one of the deputy governor nominees has come out at the weekend and looked to, I guess, just rebalance people as to not get too carried away about the Bank of Japan is going to do anything drastic anytime soon. And he said that the Bank of Japan must avoid a premature exit from ultra easy policy to ensure the economy is completely out of deflation. So again, this is probably, I'd say, central banking 101. Someone comes out quite hawkish, then the next person in line comes out and sounds quite dovish, and net you have kind of neutralizes the market's impact then in that respect. But the wheel has started to turn, I guess, in terms of for the longer term policy change that would be forthcoming from Japan. Other things just to be aware of: if you look at the price of crude oil, it has had a bit of a move this morning to the upside. We've managed to get above the high point that was seen at the reopening of trade from last night. You can see that price point actually on the break of it earlier, just about half an hour ago, has provided a bit of a floor for then a push up towards R1 and the $62 handle. So up 67 cents. You have had a bit of weakening of the dollar as the euro's kind of recovered this morning. That's probably assisted some of the price action, but there has been obviously a little bit of news to contemplate. You can see here that price at 61.75, a pretty significant level in the near-term price action in context of overnight and last week. So it might act as a decent level of support now to keep these prices elevated until the US come in. In Libya, biggest Libyan oil field. So this is the Sharara deposit, which produces around 300,000 barrels a day, has stopped pumping on a pipeline halt. So worth keeping that in mind. That's drawing a little bit of attention in the crude market this morning, and consequently helping lift the price as we've gone through the open. Other things you've had, China have come out overnight, and they've basically come out and confirmed a couple of things. They're maintaining their 6.5% growth targets, so GDP to remain consistent with the target of what they had for last year. They've also said the government lowers their budget deficit target to 2.6% of GDP from 3%. Again, there's no real tradable action that I'd say would come of this when the People's Bank of China basically deliver their annual report to the National People's Congress in Beijing. This is a little bit more of a political event rather than one that's economic, in a sense that it's really going to cause any disruption to market participants and their belief about the Chinese economy going forward. Okay, quick look at the calendar for today, and I just want to quickly go over what we've got in store for the week ahead. So for this morning, we've already started to have a couple of the service PMIs come out of Europe. The French one just came out a short while ago. That came in slightly weaker than expected. We've got the German one coming up in the next couple of minutes, so if I'm still on the mic, I'll bring that to your attention. But 9:30 is probably the main one we'll look out for in the respect of potential market moving ability, and that's because it's the service PMI for February from the UK, and obviously given the high gearing to that sector within our economy here, this number typically is a market mover for the pound, so just be on the lookout for that figure. And then elsewhere in the afternoon, you've got the ISM non-manufacturing number. That'll be at 3 o'clock. Let me just switch over my chart so you can see the calendar here. A couple of speakers, no one really too much of a standout. So today, really, 9:30, I'd be on the lookout for the service number in the UK. You've got ISM non-manufacturing PMI. I would say my overall assessment is that Italy is not a big focus this morning. Remember, a hung parliament, of which is the case, was the baseline scenario, so we've not had too much of a shock. The five-star movement, as called by Ilya here, has become the biggest kind of single party making the biggest headway, but that was, I think, to be expected. And this formation of how the structure of their government's going to be formed is going to take several weeks, so the market's over it in terms of the short term. The bigger picture here, I think, is more to do, if you're trading for today, is about this ongoing situation with Trump and this new trade war that he sparked with his comments, and the retaliatory effect this could have from people like Europe, which is going to be key. If you're looking at the currency markets this morning, the dollar is already weakening. So despite the initial dollar index being influenced heavily at the open by euro weakness, now that the full market's back in, it's a dollar weakness theme that's probably going to be the driving force of the session today. And if you start thinking of that mindset, then having a look at cable, obviously rising here back up towards the high end of the range that we're seeing, just keeping an eye on Friday's high. You've got a bit of a band of resistance here in the near term between the overnight opening high and the high that we're seeing. I did actually watch, I'm kind of sad like that, I actually watched Theresa May's speech on my day off last week. As far as I understand, wasn't really much movement. I think I probably fell asleep after about 15 minutes. A lot of detail, but just highly uninspiring. I think if you were a Brexiteer, I don't think you would have been particularly pumped on the back of her speech. But I think Brexit talk for the moment has also, in combination with the Italian situation, taking a bit of a back seat. Because it's this Trump narrative that I think, and dollar weakness, that's going to drive proceedings. So I definitely think there's a propensity for these levels to break this morning. So I would be keeping a close eye on these levels on the upside. Just having a look here in cable, it's quite an interesting level actually of where we are at the moment. So if I start looking at these charts on a little bit more long term, this is cable I'm looking at the moment. If I just adjust my chart, just bring it into shot if I can get the right. Here we go. So where we are at the moment, 38.24. If we can get above there, you can see here you've got the previous support points back on the what would have been the 14th of Feb and also on the 12th. So that's a pretty strong level. Any push beyond there, obviously you've got R1 sitting just above, and then you've got the next logical points probably around here, because then if you start looking at that level as this would be a much broader target on the upside obviously, but you can see you'd have to go all the way back to some pretty decent area here, and what we're looking at the moment is the test of these levels at this point in time. So that's kind of the key area and setup I'd be looking at in cable, on this belief that if the driving force indeed is the dollar and it continues to see weakness, then really I don't see anything new developments on the Brexit side that would make me more nervous about sterling shorts in the interim period. If that breaks, then it could open up a broader long-term target, whether intraday or the subsequent days thereafter, a test up at that 65 level in the futures. Likewise in the euro, looking much more short-term, I'd say the target here, you can see quite interestingly, if you X out the actual initial open that we had and the movement at the seen last night, electronic trade, then really the first resistance point is here, which is what was tested on this recovery that we've just seen this morning. Quite interestingly, if you're looking at the correlations, you can see you've got euro and European equity strength. So normally you'd probably be on the lookout for an inverse relationship. When the euro strengthens, the DAX typically weakens. But I'd say that this is a little bit of a byproduct of people just reacting to this situation with the European politics, particularly Italy. And so, if anything, I think the market was a little bit overdone with that initial sell-off that was seen at the Eurex Open, and people have just been buying it back. And you can see we've basically closed the gap, hit pivot as an obvious target this morning. So where we are at the DAX at the moment, I'd say is a little bit unclear now we've got to this point. If you weren't already in it, then I think that there's been a missed opportunity. I know some of the guys were looking at the break of that initial push back to the opening price for the gap fill. So if you took that, then well done. Otherwise, I'd be out of that for the moment and let the dust settle a little bit. Okay, just to round things off then, a quick look at the week ahead. So just keep you up to speed. You've had the German service PMI that's come in line with expectations, so nothing surprising there, by the way. So today we'll skip Monday, we'll move to Tuesday overnight. Any Aussie traders, you do have the RBA interest rate decision that's happening. It'll be tonight going into tomorrow morning. You do have quite a few Fed speakers as we go through. If I just actually switch quickly to I did retweet a good if you just bear with me 1 second, it's a decent summary here. So if you're looking at Fed speak and you're trying to ascertain how do Fed members, how do they feel post Powell's speech and this optimism and this threat that potentially economic prospects picking up in combination with the re-emergence of inflation might mean for further rate hikes. How close are they from tipping the balance from 3 to 4 rate hikes? Well, this is, it's going to be quite a key week to try and monitor people to see what their feelings are on that particular situation. So today you've got voting members, Tuesday voting member, Wednesday, nearly every single day this week. Only Friday is non-voters. So definitely be aware of Fed speak for the week, quite a key theme. Otherwise, obviously, as we go through the week, you start to get the various US employment indicators. So ADP, the private payrolls number, this is going to lead us in then to, of course, Friday, which we get non-farm payrolls. I think the headline reading is expected about 180 at the moment, which I guess has been the average median expectation for the last few months. But if you'll remember, last reading of non-farms that we had, it wasn't the job creation figure, it was the wage component that was ultimately highly influential for the price movement in the market, because we had this really big beat on average hourly earnings. Will that repeat? That's going to be the key. And then as a consequence, will it further alter then the market's belief about the Fed's rate hike intentions? Otherwise, elsewhere, a couple of other things to be aware of. You've got the Canadian interest rate decision. So quite a few interest rate decisions actually. You've got Reserve Bank of Australia, you've got Canada, you've got Japan, and then actually the big one Thursday, or the main one in focus, you're going to have the ECB. And as usual, you'll get the accompanying press conference with Mario Draghi. So I'm not going to dwell too much on that, because I'm sure we'll talk about this in a lot more detail later on in the week. Okay guys, with that, I'm going to leave it and let you guys just get on with things. So any questions that you have, feel free to pop them in the chat. I'll be happy to help. Okay, have a good day and a good week ahead. Thank you very much.